Welcome to Governmental and Not-for-Profit Accounting. I think that most of you, if you've made it this far in your accounting courses, you've come to understand and appreciate the concepts of financial reporting, regular for-profit businesses. Well, there's a lot of similarities, but there are a few important differences between regular financial reporting and that financial reporting for governmental and not-for-profit entities. We're going to cover those differences in these first three chapters, so they're very important in terms of you being able to understand the concepts that we'll cover later on. So with that, we'll get going with chapter 1. Some of the objectives that we'll cover in this first chapter here is you'll want to be able to identify and explain these characteristics that are going to distinguish governmental not-for-profit accounting from their for-profit counterparts. You'll want to identify the authoritative bodies that are responsible for setting these reporting standards for these entities. And then we'll contrast and compare these objectives of financial reporting for state and locals versus those for the federal government, not-for-profit, and how they compare to for-profit businesses. First, let's talk about what are governmental organizations. There's a couple types. There's general purpose governments. These are entities that provide a broad array of services. There's the federal government, the state government, the state of Alabama, the city of Birmingham, all types of kind of comprehensive entities that cover a lot of services for a given geographic location. Then there's special purpose governments. These usually just provide just a single set or a few services. Examples of these are school systems, public colleges like UAB, public hospitals, there's fire protection districts, sewer districts like the Jefferson County sewer system, transportation authorities like MARTA in Atlanta is an example of a special government, and there's many others. Not-for-profit organizations like the one I work for, the UAB Educational Foundation, we're a separate entity from UAB. We have our own tax ID number. We file our own Form 990. It's kind of like our tax return, even though we're exempt from income taxes in general. And they're, again, exempt from state, local, federal taxation. Examples of these are like your church, again, private educational and healthcare organizations like ours, like the Red Cross, the Birmingham Museum of Art. All these are types of not-for-profit organizations. In governmental and not-for-profit organizations, the main differences that they have from business organizations are that the resource providers, i.e. the taxpayers, don't expect to receive benefits in proportion to what they contribute. Whereas a stockholder or a lender do expect to be compensated in proportion to what they contributed to the business. Now, there are lenders on the for-profit, of course, and the not-for-profit and the business side. That would be a similarity of someone who would expect to receive proportional benefits to what they lent out, but in this case we're talking about ownership, so there's no stockholders, and that gets to the next point, which there's a lack of a profit motive, and there's an absence of transferable ownership rights. The taxpayers don't own the government in the sense that they could go out and sell their shares of the entity that they pay taxes to. They're not transferable. Governmental entities, the difference between those and not-for-profit organizations are that the power ultimately rests in the hands of the people, the taxpayers, the voters, for governmental organizations. The people, they delegate their power through public officials by voting for them in the election process, and they are empowered by and held accountable oftentimes to a higher level of government. So local governments are kept accountable to state government. The same with the the governmental organizations like for-profit college. I mean, not for-profit, public colleges, organizations like that. They have taxation powers. Do government entities that not-for-profit don't. Not-for-profits have to rely on the generosity of donors and can't take the money by force like the government can. The sources of GAAP and other financial reporting standards for these entities, FASB provides the standards for business organizations and also non-governmental not-for-profits like the educational foundation that I work for. We're considered a non-governmental not-for-profit because there is a majority non-UAB membership on our board. They're local business leaders, whatever, and that keeps us nominally independent from UAB, although UAB, pretty much manages and directs us on how best to serve them, which is our main purpose. GASB, however, if we were a majority UAB board, our board of directors, we would be considered a governmental not-for-profit and would have to report on GASB standards just like state and local governmental organizations do, like UAB does. FASAB, that's for the federal government and its agencies and departments. Governmental financial reporting has to be different from business reporting because there's different users and they have different needs. The governmental financial reporting mostly focuses on stewardship and accountability, and in terms of how the public resources or taxes are raised and how they're used to provide services. The governmental reports, financial reports, they're used primarily to compare budgets with actual financial results, to assess the condition of the governmental entity as well as the results of its operations. To assist in various compliance areas where certain government regulations or rules require certain financial metrics to be met for a given entity, and to assist in evaluating how effective the government organization is or how efficient it is. Number one concept is accountability, and I'll talk more about that later on, maybe with a video that kind of explains why accountability is so important. But it's a cornerstone of financial reporting in government. It's the very first section of the GASB statements, and what we mean by accountability is that it comes from our rights as taxpayers and as citizens to know what's going on. And it imposes a duty on public officials that they have to be accountable because they're taking money through taxation, and that taxation is not optional, and how that tax money is spent. Accountability is also the foundation for federal government financial reporting. The FASAB standards, which stands for Federal Accounting Standards Advisory Board, those are targeted for both internal users, management, and as well as external users. The federal government reporting is supposed to assist the users in evaluating budgetary integrity, operating performance, stewardship, and adequacy of their systems and controls. The interesting thing is if you follow a lot of the news related to the federal government or related to this whole fiscal cliff and things like that, the federal government, the budgetary integrity, on paper, they maintain budgetary integrity in a lot of cases, but there's a lot of budgetary gimmicks used. For instance, since the 60s, the surplus that's come in from Social Security taxes, which is supposed to be its own separate fund, have been used to help balance the federal budget. So it's the deficit throughout since the 60s, or surplus, has actually been a lot worse than has appeared, because those revenues from Social Security taxes have been used to fund the general operations of government. So interesting if we were to see some changes in how budgetary integrity is approached going forward. But I wouldn't hold my breath. Not-for-profit reporting is supposed to provide information for making resource allocation decisions. What do we need to spend money on? What money needs to be set aside for this, for the repaying debt, for things like that, for making capital improvements. Um, they assess the services that the not-for-profit provides and how they'll be able to continue providing those services. And it also used to assess the management stewardship. How well is the management taking care of the funds? Are they remaining liquid to pay off debts? Which is a similar function for regular financial statements for for-profit businesses. The assessing their economic resources, their obligations, their net assets, which is the same thing as retained earnings in the for-profit world. And this is just kind of a view of these general purpose external financial reports. I want to point out here that one of the main differences that you're going to see in financial and governmental accounting is this second box. You see two separate government-wide financial statements and fund financial statements. We're going to talk more about this later, but this has to do with the dual track accounting. And basically, you're going to be making a lot of the same entries twice. There are fund financial statements for individual funds that's done on a modified accrual basis, and we'll cover some of those definitions later. There's also government-wide financial statements, which are accrual basis financial statements, and so some entries you won't have to make twice. But when you're working through this Smithville application, there are going to be quite a few entries that you have to make twice. So I just wanted to give you a heads up on that. And again, in conclusion, for this first chapter, I skipped over some of the material that we're not really going to hit on too much about federal financial reporting, things like that. But you will become familiar with these GASB, FASAB, FASB standards that relate to these governmental and nonprofit entities. And as well, you'll understand that accounting and reporting for these entities are different from for-profits, and that'll become clear rather quickly. But again, these first few chapters are the most important to really understand the concepts moving forward.